What are we going to cover? We're going to cover, hey, what did properties sell for in terms of the average price per unit? What was the total sales volume in specific corridors of the areas of service that my team and I cover? When you take a look at the total stock, available properties in a particular area, how many of those buildings sold, right? It gives us an idea of the percentage, the turnover percentage of how active has the market been. And then of course, we're going to discuss rental rates. Hi, this is Chris Drummond from The Apartment Dealer, and welcome back to The Apartment Dealer Show. Today, we're going to walk through our year-end 2022 market roundup. What occurred over the course of 2022 in terms of property values, property sales, total sales volume, rental rates, vacancy rates, and most importantly, what can that tell us as we embark on 2023? Now, the information, the data, the analytics that we're going to cover come from one of three specific sites. When it comes to the market analytics, sales, and so forth, that comes from CoStar Group. Now, CoStar Group is a third party, independent of myself, independent of the Apartment Dealer. And they're in the business of just that, market analytics. They are not involved in brokerage, sales of properties of any kind. And that's important because, as I've said before, they don't have a dog in the race. They're not trying to persuade multifamily investors to sell or to buy. They're just saying, look, here's what occurred. And they do this across the entire nation. So that's where we get the market analytics for. That's important because it's not Chris's opinion. Because sometimes if you've ever been to other, say, brokerage firms, market updates that they do kind of similar to this, then you sit there for an hour and they do go through some analytics, but they can be shaded when you depend on sales. And then they're just trying to hammer you on why it's time to sell and so forth. This is not that. We're reporting to you, hey, here's the real data. Now, when we transition over to rental rates, we use two different websites. Rent-A-Meter, which is, again, independent of myself. It's a third-party service that you can pay for as a consumer. And then you actually can search what are the rental rates in your area for 3 bedrooms, 2 bedrooms, etc. And then we also take a look at Zillow. Zillow has become of late the #1 platform to advertise your vacant rental units. So we take a look at Zillow to give us real-time data in terms of what are vacant rental units that are on the market now, what are landlords looking to collect, what's been collected in the weeks leading up to our presentation here. That's where we get the data from. Now, what are we going to cover? We're going to cover, hey, what did properties sell for in terms of the average price per unit? What was the total sales volume in specific corridors of the areas of service that my team and I cover? When you take a look at the total stock, available properties in a particular area, how many of those buildings sold, right? It gives us an idea of the percentage, the turnover percentage of how active has the market been. And then, of course, we're going to discuss rental rates. What are the current rental rates in your area? And then CoStar, what do they predict this year, 2023, when it comes to us being able to raise our rents and having to combat with any potential vacancies? Now, my team and I, between Los Angeles and San Bernardino counties, service 8 different corridors. Really, we kind of coined how these corridors are broken up. And the reason why we broke the cities into these 8 chunks, these 8 corridors, is because the values typically on average of the properties that are selling are about the same. Asking rents are about the same. The tenant base is about the same. So it gives us a way to, again, quarter off the individual corridors and then get an idea of, on average, what's taking place. So you get a sense of painting at a larger map that my team and I essentially cover from the 710 freeway in LA County and head east all the way to about the 215 freeway. We as far north as the 210, and then as far south as about the 91. This is about our coverage area. The Pasadena corridor. Now, when we take a look at total sales volume, this being, if we take a look at every building that's sold in this corridor over the course of 2022, what would be the total dollar amount. That's $145 million for this particular corridor. The average price per unit that we saw over the course of 2022 was $366,000 per unit. The average cap rate being net income divided by price, or said more simply, if you were to buy a building all cash, what would be your expected rate of return? Average cap rate 3.7%, and the total stock available of buildings between 5 units and 50 units, which is what we really track, 5 to 50 unit properties. Total stock available, 1,634 buildings. Of those 1,634 buildings, 34 buildings sold. Now, our current rental rates. You can pause the video here, find your city and the bedroom count you're looking for. But to give you an idea how this functions, let's say you have a property in South Pasadena. The average asking rent on a studio, $1,735, a 1-bedroom, $2,008, 2-bedroom, $2,530, and a 3-bedroom, $3,225. And of course, you see across the bottom there, the averages for the corridor. Of course, some of you are collecting less than these amounts. Some of you are done a good job improving your units and what have you, and depending on the location, maybe getting well above. Keep in mind, these are just averages. Now, let's take a look at the highest sale in each of the cities within this particular corridor. We do this to give us an idea of, well, what was the ceiling over the course of the year. We don't take a look at this to say, okay, well, if this building sold for X, that means my building's worth X, right? Because again, every building's different between the income it collects, the total bedroom count, lot size, and all the rest. That differs. No different than if I was highlighting, let's take a look at the cheapest buildings that sold. You wouldn't say, oh, okay, that means my building's worth X, okay? This is just to give us a bird's eye view, some sales. In the city of Pasadena, this 5-unit on Oak Knoll sold for $2,580,000. That's $516,000 per unit. Big price per unit there. And in South Pasadena, this 8-unit on Huntington Drive sells for $585,000, if you can imagine, for a total price of $4,680,000. That seller, I'm sure, was excited about that one. When we move on to rental growth rate and vacancy rate, what happened over the course of 2022, and more importantly, what can we anticipate this year, 2023? We lean on CoStar for their data. They break up the corridors a little bit different than we do, but close enough, and the data is the best of what's available. That's why we utilize it the way they've chunked this down. But what they have is this. The vacancy rate in 2022 was 2.6%. The anticipated vacancy rate in 2023, 3.3%. So we're going to see an uptick in vacancy rate in this corridor. And that's no surprise because you're dealing with a tenant base that has the ability to buy single-family homes. When I say has the ability, meaning, their financial means. And so when the market begins to shift, you always see an uptick in vacancy in this particular corridor first. Annual rental growth rate over the course of 2022, you saw a growth rate of 2.6%. Not all that much of a rental growth rate when we're comparing some of the other corridors that if you were to take a look at the other corridors on average, they saw over a 5% growth in rental growth rate, but nonetheless tracking on average. And then the annual rental growth rate in 2023 is going to be 2%. Why? Because you're competing with a higher or an anticipated higher vacancy rate. And so things are shifting here in the Pasadena market. So what does this all mean to you? Well, it depends on what is your overarching goal of owning multifamily properties. Your properties, my properties, are a means to an end. In other words, simply they're sticks, bricks, and nails. You own one location, I own another. But we own multifamily property because we want to. Now, this is your turn to fill in the blank. For most people, they would say it's because I'm looking for cash flow. I'm looking for something, a tax shelter, tax savings. I'm looking for my wealth to grow. I'm looking for appreciation. Those are the top three: cash flow, appreciation, tax savings. That's why investors would own multifamily properties. So my question to you then is, whatever is your main objective, why not get more of the good stuff? For the same amount of time, energy, risk, especially with all the legislation, right? That's involved in being a multifamily investor. If cash flow is your means to an end. That's your main motivator. That's why you manage multifamily properties. Then is there a path for greater cash flow? If you're looking for your overall wealth to grow for you and for your heirs, well, is there a strategy which you could utilize to increase your portfolio size, which then only adds to your overall wealth, the appreciation of the capital that you initially started with? And of course, as you contemplate 1031 exchanges and transitioning to new properties, then there's additional tax savings because there's newfound depreciation to write off property improvements and so forth. So it's a simple equation of, if we could have more of the good stuff of why you and I own multifamily properties to begin with, then what is the strategy to get us there? Now, to know what your options are, to know what is the best strategy to get you from point A to point B, that takes an analysis. And that is much of the work that we do here at the Apartment Dealer. As you know, we do a lot of landlord education. And what you're seeing on video is much of what, if I'm sitting one-to-one with a client, we're discussing the dynamics of the market they own. What's their rate of return? How much equity do they have? What's their rate of return on equity? And if we were to put that equity to work, what could that mean? How much growth could they see? Could they see any growth at all? Could they see exponential growth? For others that are looking to exit multifamily altogether, they're at a point where they're ready to write off into the sunset. Okay, well, when you're looking at capital gains tax and all the rest, what are different avenues to mitigate that tax? If we're considering how do we set our heirs up to win, right? How do we put them in a better position? If they're going to need more money in their lifetime to create the same standard of living that you've been able to enjoy, especially at the rate of which the cost of things is going, well, then what transitions can you do currently as you own the portfolio, as you own the property or properties that would set them up to win, put them in a better position? That takes an analysis. That's something that we're happy to help you with, assuming you own within the corridors that we service, of course. This is where you and I get to see in black and white, what does the math tell us? Our emotions might tell us something else, right? Because after owning a property a while, you get to know the tenants, you've done a lot of improvements, you're really just proud of a particular property. Maybe you inherited a property, so there's years of family equity, blood, sweat, and tears in a particular property. And I totally validate all that, understand that, and that's the emotional component that would go into a decision. But when we're looking at it objectively, what does the math tell us? What is the best option for you to get whatever you filled in the blank earlier? We'd be happy to assist you with analysis. Please reach out to our office. And to get a better picture of, hey, we went over average price per unit, average, the sales volume, and a lot of, on average, what was going. But what if, can we get more granular? Well, we get very granular at our live educational events. And our next educational event is coming up here soon in spring. And so again, assuming you own multifamily property within the corridors that we service, we extended an invite to you to attend. The reservations are not yet open, so please don't contact our office to try to reserve a seat yet. Now's not the time. But that's where we bring together real estate attorneys, tax consultants, commercial lenders, 1031 exchange specialists, and all the rest. Begin with talking about the dynamics of the market, what's going on in the market, and then, okay, based upon your strategy, well, what are the legal implications, the financial implications, and all the rest? That's what occurs at our live event. And then if you have questions that are on your mind that you would want to put forth to the various speakers that we invite to speak, that's your opportunity to get your question answered. All on my dime. I like to buy you essentially an hour of these gentlemen's time, an hour of my time, here at this event. And that's what we do at our live educational events. Until then, stay glued to our YouTube channel. Be sure to subscribe to our channel so that you're getting the alerts as we release the videos over the course of this year. Give this video a like, give it a thumbs up here. That helps us get this content in front of other landlords and to assist them in the ownership and management of their properties. Share a comment below. What information did you find most valuable? What's your strategy for 2023? What questions could we answer that would be most helpful to you? Please share it in the comments below. And until we speak again, this is Chris German from The Apartment Dealer, wishing you positive cash flow, tenants who behave, and much protection from Uncle Sam. Till next time.